Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Yang Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Good to have you back on today.
Happy to be here.
Well, let's start with Wall Street, where last Friday we saw the worst session in a year and a half. The Dow Jones Industrial average down more than 2.8%, and it was actually off more than the tech stocks on the Nasdaq were. Looking at the futures, also, we're likely in for a significantly lower open on Monday. Tell us about this volatility in the global markets right now, Professor, and what you'll be watching this week.
Right. While the U.S. indices have been falling since April 19th, the Friday's fall was the worst one-day loss since the beginning of the pandemic. And the Dow fell by 2.8%, S&P also by 2.8%, and Nasdaq fell by 2.6% on Friday. But for the week, it wasn't. It was a bad week, but still, it wasn't as bad for some indices on Friday. For the week, Dow fell by 1.9%. That's the fourth straight week of loss for Dow. S&P fell by 2.8%, and that's the third straight week of loss for the S&P. And Nasdaq fell for the week 3.8%. Year to date, Dow fell by 7.6%. Year-to-date, S&P fell by 10.9%, and year-to-date, Nasdaq fell by 18.9%. This is attributed basically to two reasons: disappointing quarterly results for the companies reporting their earnings so far in the first quarter, and then Fed is making stronger and stronger statements that in the next FOMC meeting in May 3rd to 4th, they will almost surely raise the interest rate by a big step, 0.5 percentage points. If they do raise it by this big step, it will be the first since May 2000. But there has been also some statements, especially by FOMC member Bullard, saying that they may raise it by 0.75%. And this is not out of the possibility. The Fed has raised the interest rates by 0.75% point in the past, notably November 1994. So now the question comes whether the Fed's increasing interest rates will end up as a soft landing or a hard landing. Now, I've mentioned the very high interest rate increase of 0.75% in 1994. It was part of the package which raised the interest rate from 3 to 6% between January of 94 to January of 95. And while it is generally thought of as success because they did succeed in getting a soft landing, that is, they continued the strong growth and low unemployment, some analysts argue that it set the seeds for the financial crisis in the latter half of the 1990s in Latin America and Asia. So the big question now is whether the Fed's increasing interest rates will end up in a soft landing or will end up in a recession. And the Fed is arguing that right now the employment and employment is still strong. So they will be able to have hopefully a soft landing. We'll have to wait and see whether that will be indeed successful. Now, just looking at the stock market compared to pre-pandemic highs in February or March 2020, Dow is now 14.4% higher than the pre-pandemic high. S&P is 26% above. Nasdaq is about 31% above. And the rule of thumb for the average stock market return per year in the United States is about 10% per year. So we can almost say that S&P and Nasdaq are back to somewhat of a normal level. Dow is actually perhaps underperforming, but we are, in a sense, returning to post-pandemic normality. Europe, their indices are down. It's following the U.S. lead, but also Europe has a bigger fear of inflation because they're more directly hit by the Ukraine invasion. And there is some news that the European Central Bank will end their bond purchase program as soon as possible and raise rates sometime between July and September. And DAX, FTSE, and CAC all down on Friday, somewhere between 1.4 to 2.5%, depending on the index. Asia, not a great week here either. China's lockdown and lower growth rate is depressing the markets. And China's first quarter growth, 4.8%, did beat the estimates, but numbers are substantially below the 9.3% growth that we saw last year. And it is unlikely to meet the government target of 5.5%. And employment in major cities fell in the first quarter. So the Asian markets, at least for now, doesn't seem very optimistic.
Indeed. It's pretty much the same story around the world so far, and here in Korea too, over 1.7% down on the KOSPI, 2.5% on the KOSDAQ. Some of the worst hit sectors were shippers and airlines. A big move in the exchange rate today too. Tell us about the domestic market, Professor.
Well, KOSPI last week it was up 0.4% overall, but we had a drop on Friday and today. So as you went down, KOSPI went down by 0.9% on Friday and 1.8% today. It ended today at 2,657.13. Individual spot, institutions and foreigners sold. KOSDAQ last week, they fell by 0.2%, but again, if you just look at Friday, it fell by 0.7%, and it fell today by 2.5%. It ended today at 899.84. Individual spot, institutions and foreigners sold, and it just generally points out that the Korean market, as well as other Asian markets, are very nervous about the rise in the U.S. interest rates, as well as concerned about the Chinese shutdown.
Well, if we could talk a bit more about inflation, Professor. According to the Finance Ministry and the IMF, in Korea this year, inflation is going to be the second highest among the developed countries in Asia. There's talk now about stagflation, of course, where at the same time economic growth is weak. Higher prices for things like oil, though, would seem to be mostly beyond the Korean government's control. Is stagflation happening or about to happen, and what can be done about it?
Okay, well, stagflation, the definition for Korea is somewhat unclear. Usually in advanced countries, stagflation is high inflation coupled with recession, which in an advanced country means negative growth. But Korea really had negative growth. So in Korea, you tend to say it's high inflation coupled with a slowdown, and no one really has a good definition of what is a slowdown for Korea. But still, because Korea had a relatively high growth rate during 2021 because of COVID bounce back from the coronavirus shock, we will probably have a very much slower growth than we did in 2021, even without the problems that we're seeing from high inflation and from the Ukraine invasion. Now, why is Korea's inflation the second largest in Asia? Actually, that answer is fairly simple, because Korea imports a lot of oil and a lot of grain. Korea is the fourth largest oil importer behind China, U.S., and India. This was 2020 figure, so it was affected by the coronavirus hit. But still, the interesting thing is Korea imported more oil than Japan. Japan imported 2.5 billion barrels per day in 2020, and Korea imported 2.7 billion barrels per day in 2020. So because Korea, even though the Japanese economy is so much bigger, because Korea imports so much oil, and also Korea is one of the 14th largest importer of wheat and 7th largest importer of wheat in Asia, behind Indonesia, China, Bangladesh, Iran, Philippines, and Japan. And because these prices are rising so quickly, the inflationary hit, it's natural in Korea. We just import a lot of the things that prices are going up right now. Now, what can Korea do? Monetary policy, as you said, it probably won't do that much. Korea needs to raise interest rates because we need to follow the U.S. trend. If you think about the exchange rates as well as the debt problem that we're seeing and asset price bubbles that we're seeing. But we probably cannot raise the rates as much as the United States. We'll also need a very flexible fiscal policy so that when the Bank of Korea raises rates and causes some social and economic problems, we can use very carefully targeted fiscal policy to deal with the problems, hopefully without raising the government deficit or inflation too much.
Hopefully so. All right, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.